Welcome back to another episode of Worth a Listen. I'm your host, Chris Haney, and continuing our conversation about small business lending, joining us today is Galen Burke. How you doing again, Galen?
I'm great, Chris, and yourself?
Awesome. Doing well. Hey, thanks for coming back in and continuing this conversation with me. I really loved hearing your story and kind of why you do what you do and just hearing those things about small business lending, but I really want to get into the weeds in this section. You mentioned some things in our last session, some words that I want to define maybe and get a little bit more in depth to. But trailing back from our previous conversation, you talked about how applying for loans is a lengthy process, and it can be a myth sometimes because if you get the right information and the right documentation to me up front, it makes the process go smooth. So I want to start there. Sure. When an entrepreneur is coming to you or when a small business is looking to get a loan, what documentation do they need to have?
Yeah, absolutely. So a written business plan that's well thought out, preferably like reviewed by somebody else.
So what is it? What is a business plan? Yeah. Is it just like a one pager? What are you looking for inside a business plan?
No, we want to. You can have a synopsis of everything. That's very helpful, actually. But then it's going to be like that's your trail guide for your business. So it talks about what the business is going to do. What are we going to focus on? It talks about how are you going to make money? Like what's your pricing strategy? It's going to talk about how you're going to create customers and attract customers, your marketing strategy. It's going to talk about growth. It's going to talk about succession plans, meaning like if you don't have the right people in place right now, how are you going to get the right people in place? So when you scale, when you grow, there's no hiccups and there's no pause in your business. You can just keep on going. Or when you're finally done with doing what you do and you want to sell the business or you want to pass it on to the next generation, or you've got some people who are maybe partners who are vested and you want to sell out to them, you spell all that out in your business up front.
What does that mean for you though, as a business lender? Are you reading these?
Absolutely, yeah. Because we're investing in their business by giving them a loan. It's just as much our business as it is theirs at this point in time. The second we start giving you money for your business, it's our business too. So yeah, I want to know how you're going to market, but I don't only want to know how you're going to market. I want to know that you understand what you wrote down, because there are templates out there.
Okay, I was about to ask that. ChatGPT is a big deal. Yeah. Have you been seeing some? Do you see business plans where you're just like, absolutely, this was not written by you?
Yeah, because like I said, whether it be something like AI wrote it or whether it's just like this kind of choose your own adventure pre-filled kind of or place where you can fill almost like Mad Libs, right?
Okay.
Like your business plan, like you can tell what's boilerplate templates, right? And that's when you really got to start digging in and start asking them about it. Like, well, I see you say you're going to do this with, search engine optimization. Like, tell me about how you've done that before. And if you get deer in the headlights or you hear crickets, like, okay, then you got to kind of explain them. Like, look, like for your marketing plan, this is how you're going to get the word out and how you're going to get customers. Like, you wrote this stuff down, but you really need to follow it. So How am I going to get comfortable knowing that you're going to follow this and you really know how to do it?
Well, does every company, small to large, do they need to provide this business plan to you?
It depends on the loan type, right? If it's an operating entity, especially if it's startup, so to speak, right?
Okay.
Like we talked about it earlier, a startup's not necessarily like day one, here you go, here's money. There's some history to it. Like they all need it, whether it's small or big. It could be somebody who's starting they're a tradesperson, right? And they're starting a small operation in that trade. They need the business plan. It could be somebody who is seeking to buy an existing business that's very profitable and has been around for a long time. And the person buying it knows what they're doing, and the person who's selling it knows what they're doing. We want to see a business plan. How are you going to take this business that's been operating successfully, make it your own, but take it and go with it and grow it, right?
Okay, so I think I make wooden cutting boards out of my garage, and maybe I'm just looking for a small line of credit to possibly put large sections of raw wood on that I purchased from a dealer.
Yeah.
And my business plan is I make cutting boards and I sell them online.
Yeah.
Are you still looking for a well thought together, put together business plan for that type of craft work?
Depends on how long you've been doing it, right?
Okay.
If you've been doing this for years and you're coming to us and we're like, well, maybe like a smaller credit card just might be all you need. That's not going to go through this full kind of vetting process, right?
Okay.
But if you're coming to us and you're looking for money to kind of get you to go to market, right?
Mm-hmm.
Yeah, we want to know how you're doing this craft, because last thing we want is like you've been successful once, we give you money to do it again, and then now it just you fall flat because maybe you've sold to all the people that wanted your product already, and now you don't have an audience anymore. That's part of your business plan. Like, where's your audience? What's the demographics look like that you're selling to? Because if you've already kind of tapped out your market and you have a very specific thing, maybe you don't really have anywhere to grow.
So as a business lender and kind of a leader in the industry, when you receive these business plans in, have you ever kind of consulted with that business owner? Hey, I like this business plan, but there's a few things in here that I want to review with you and discuss.
Yeah.
Do you give that consultation to them as well?
Mm-hmm. Every time.
Okay.
Yeah, every time. It may not be me, but the lender that's doing the deal.
Okay.
Yeah. Because there's always going to be kind of questions, and those aren't bad. It's it could be like, wow, this is interesting. Tell me how. Maybe I haven't seen this approach before. Tell me how that's going to work for you, or where did you come up with this? And they may be like, well, I've actually got a friend who does the same thing in this other city, and this is what's made them successful. It's like, oh, that's great. But that may help lead to other questions, right?
Okay.
So, yeah.
And that is quite a bit different from consumer lending, where I can I can go apply for a loan and I'm not being asked to put up collateral. I'm not being asked to provide a business plan.
Yeah.
So where is that line? Where do you draw that line between a commercial loan and just a consumer loan?
Sure. If you think about kind of after we've discovered what they need and we kind of match them with a product that we're going to kind of pursue, if it's more of like a consumer product, well, we're going to treat it more like a consumer kind of underwrite. For instance, credit cards, auto loans. Like, especially like when I say auto loan, I mean like an auto that was produced for household use, but they're using it in their business.
Okay.
Those are pretty simple underwrites, and we want that to be a smooth, quick process for people, because that shouldn't take forever. We shouldn't be holding people up for stuff like that.
Okay. So outside of a business plan, what other items would you like to see from business owners when requesting loans?
Yeah. So something we always need is their historical financials.
Okay. Talk to me a little bit about that. What is a historical financial? How long should companies, what should companies provide? Like how far back do we need to provide to you to consider?
Sure. Minimum of 2 years of tax returns. So a lot of times we tell people you need to be in business for 2 years, but that what that really means is I need historical financials of you being in business for 2 years. So you'd have to be in business a little longer than 2 years to provide me 2 years of tax returns for your business. And then that's really minimum. And there's some transactions, like if we're doing a bigger dollar deal or a more complex deal, we're going to ask for 3 years. We want 3 years of business tax returns, 3 years of personal tax returns. We're going to want a business debt schedule. So show me what other debt you have out there for your business or other businesses, because it's easy to hide debt that you've taken out in a business, because we're not just pulling some. There's not like some standard. There actually isn't some standard like business credit bureau. You can just pull a business credit report on somebody and know all the debt they have out there. It doesn't exist. And then interim financial statement. So what that means is, say you filed your taxes in March or something like that, right? April. Took it up to the deadline, file it in April, but now you're coming to me in like October asking me for money. Well, there's been some time that's happened since you filed your taxes, and that tax is based off the end of the year too. So we're almost in the new year. You got to provide these interim financials, meaning like quarterly profit and loss statements, either company prepared or CPA prepared, or it depends on the level of accuracy we're absolutely needing. So,
do you see kind of a variety in those type of documents, from maybe a larger, more established company to a entrepreneur just trying to start?
Absolutely, yeah.
You see a big difference. Does that what type of, I guess, how does that make you feel when you see that difference?
Yeah, yeah. So it's not bad, but it's what's the reliability of the numbers? You know, because if you're putting stuff in QuickBooks and you're kicking out a profit and loss statement for me, it all depends on what you put into it. So we'll require CPA prepared interim documents sometimes, and so somebody will have to go get professional help to bring us back, financial statements that somebody who's a professional in the community who that's what they do has provided us for. So,
do you ever find that you have to combat phony financials? Do you ever see? I'm sure you've done this enough to where you can probably spot, hey, these financials don't quite make sense.
Sure.
Tell me about that process a little bit.
Yeah, I mean, it pans out pretty quick because that's after we get these documents, right? First thing we do, we call it spreading financials. So we're taking the numbers, we're lining them up, and we're putting them in place and kind of common sizing stuff, meaning like I'm comparing them over time and to kind of establish ratios that are financial ratios that are out there. Things won't add up. The math won't math.
Okay.
And we're like, now, is it intentionally fraudulent? You could probably spot that, but do people make errors all the time? All right. So we have to go back and question them. Hey, this doesn't match here. What happened here? And you can get some fixes.
And some of these errors that you're talking about, they could be just benign in nature. Maybe it was just a miscalculation. And have you had situations where you look at financials and you're like, hey, this may not make too much sense, and the owner was like, you know what, I actually miscalculated that. Give me a second, let me run these over again, get them back to you. Does this happen? So it's more of a colloquy between you and the business owner, getting these documents, I guess, prepared and ready for submission. Okay.
Yeah. That stuff happens, right? And I think that's part of the whole going to maybe a small organization like us and getting that relational consultation.
Okay.
You're building trust on both sides of the desk here. So, you can tell if somebody's making something up.
Okay.
Right.
So what other documents or things that you would need from a small business owner to help facilitate a speedy application process?
Yeah. The other, so I mentioned the financials. The other things would be their entity documents. So what are the documents that are normal for the business that you've created? So like an LLC would have a certificate of filing. It would have your operating agreement, or sometimes like a charter. And it would have your EIN, which is your employee identification number, which is used like a social security number, but for the business. Gotcha. So things like that. Sometimes it's a struggle to get stuff like that for businesses that have been established for a while. They may have misplaced something if they haven't requested a loan in a while. So they may have to get a copy, official copy kind of thing, stuff like that.
So I'm sure you see a lot of different, I guess, types of businesses, everything from like S Corps to LLCs to incorporated companies, things like that. Tell us a little bit about is there to you a difference in lending to someone who has an LLC or to someone who has like an S Corp?
Yeah, those are pretty similar,
Okay.
because those are pass-through entities. So the tax falls on the individuals that are basically guaranteeing this. That's why we get the business tax returns and the personal tax returns. You get the C Corp stuff, and then there's like double taxation going on. Yeah. But at the end of the day, we're still collecting the business tax returns, still collecting the personal ones. Not much really difference. Where it gets complicated is when the main guarantors of the transaction own just 10 other businesses.
Yeah. We had a lot of like jargon, I guess, in there, and we may want to just maybe define a little bit. So pop quiz, what's an LLC?
Sure, limited liability.
And what's the difference in an LLC, or what is an LLC and what is it? What is it?
Yeah. So it's basically this entity where you have it's either member managed or manager managed, and you're kind of like the limited liability is to that business, right? And so that's why people have multiple of these things, because they want to protect their other businesses from these businesses. whatever should happen in one business. It doesn't affect another business. This is why we ask for personal guarantees on loans, though, so that they're not like so-called like off the hook. If something were to go on with our loan with them, like we're investing in your business, so should you. So you need to guarantee this loan.
So if you have an LLC, one of the things that a lender may want to do is for you to guarantee that loan.
That's right.
Okay.
Yeah.
Is there any other type of corporations or company structures where you won't have to do that personal guarantee?
No.
Okay.
There may be some lenders out there that are okay, and I know there are some that don't require the personal guarantee, but that's going to be far and few between.
Okay.
Most of the time, we're asking for a personal guarantee.
So generally, when you see small business owners, operators looking for loans, are you seeing a majority of LLCs? What type of companies, corporations are you typically seeing? Out there?
LLC is the most common.
Okay.
Yeah. Well, we'll get some sole proprietorships, but mostly LLCs and S corps.
Okay. So what's a sole proprietorship?
Sure. Sole proprietorship is you doing business as you. Now, so it could be like if I had my own sole proprietorship, it could just be my name.
Okay.
And then I'm just filing on my personal tax return for taxes for my business. Or it could still be me, but I'm doing business as. So you go get this thing called an assumed name certificate from the county. That could be a different name than me, right? And so then that's my business name. So it's me doing business as this. And you can have all kinds of you can have a bunch of businesses. They're all reporting under your own name. I think it's where I see that shift though is once people start to scale or grow one of those sole proprietorships, somebody's going to give them legal advice somewhere along the ways or tax advice of like, hey, are you doing the right thing? Just keeping that under your own personal name. Do you maybe want to protect this by carving it out into something else? So
yeah, and I know there's a lot of ways for companies to do that, and the reason I think people create LLCs is to shield their personal accounts from the business accounts, and I think that's one of the things probably is a good advice for small business owners is to make sure to keep your personal accounts away from your business accounts. And that's why probably it's so important to structure your business in a proper business entity.
Yeah. And there are professionals out there that can definitely guide people with how to structure and what makes the most sense tax-wise, liability-wise. But when you boil it all down, yes, keeping things separate is the best way to go. That's some really great advice, even as like starting up as a side hustle, sole proprietorship type thing, is that, don't just run stuff through your personal account. Because when it comes time to file your taxes or when you want to step up and actually go get that loan, like you're not going to have anything in order that needs to be in order. And we're going to say, okay, let's get everything in order, and then come back to us after you kind of season this a little bit and show us the truly what the business made and how that's separate from you. Yeah.
Okay. Any other type of documentation or things that owners need to know about when coming to you for small business loans?
Yeah. Out of what I just said, there's personal identifying documents. So we have people fill out a personal financial statement, and then they also provide their driver's license, a passport, and like social security card as kind of like just personal identifying documents. But that personal financial statement, that's kind of like your own personal kind of like balance sheet. It has a little bit of income. It asks you if you have W-2 employment income and stuff like that on there, but it's mostly your personal balance sheet. So like the assets you own, the liabilities you have, and then what's your net worth at the end of the day. Again, it's all user input, and people can put whatever they want on there, but it gives us a good starting point to try to piece together how this loan's going to work. Because primarily, okay, the business that's getting the loan should have the operations or like the lease income, whatever kind of business it is, to pay the note, and then have some cushion. But we're looking at secondary repayment. We're looking at tertiary repayment, right? So, liquidation of assets could pay off this thing if we had to. But there's also, you personally, if you make money elsewhere, you can contribute to the payment if something's happening in the business. So we're looking at all these things. So we need that document as well.
Okay. And do you offer any services where, or do you offer personal advice when folks come to you? Maybe they're just starting out and they need help
Yeah.
figuring out what type of corporation or what type of company I need to structure myself in. Do you even offer advice like that as well?
I don't. I mean, I give them advice on where to go.
Okay.
Okay. Yeah. Yeah. So a lot of times it's steering them towards like a CPA, a certified public accountant, or an attorney, somebody who's the expert, who's got the credentials that says they're the expert in that realm. There's also the Small Business Development Center, the SBDC. We work hand in hand with them a lot, with people that are trying to start a new business. That's a free service. The people there will listen to you, find out what you want to do as a business, and they will provide help with on how to. They won't create your business plan for you, but they'll give you advice on how to create the business plan. They'll work with you on setting up your basic financial statement, your balance sheet, your income statement. And so they'll show you how to create those and how to create year-over-year projections, so that they can start to put things together to then one day come to a bank and say, okay, I've got my plan, I've got my financial plan, I've got my marketing plan, I've got all this stuff. So that's an organization that I mentioned that place a lot, the SBDC. People have never heard of it, and it's free service. That's what they do. And so we steer people to them a lot.
Okay. So it seems like you have seen a lot of great businesses out there get loans and aspire and grow. And you might have seen others take loans and then not be as successful.
Yeah.
So as a small business lender, or maybe there are things that you see commonalities in successful small businesses that you don't see in less than successful small businesses.
Sure.
What are you seeing out there?
Resume is the big thing.
Okay.
So if you have the resume to show that you've done this thing or similar things for many years, it's kind of like interviewing somebody for job employment, right?
Okay.
Like, show me your resume that you can do this thing. That's huge. Because that's where this misconception of a startup business comes into play. Startup is not day one coming in and getting a loan. Startup is, you start that a while ago. And
you get that business plan created, you get the
plan.
idea, you start developing everything that you need up front before you come to a lender and say, hey, this is what I want to do. Here is the plan.
Yeah.
Can you help me afford this?
Yeah.
And that's kind of in a nutshell what you do as a business lender.
Yeah. Yeah.
Talking to me about those successful entrepreneurs, about their marketing, about expansion. Do you see any pitfalls with those new or even established businesses? Where can some of those entrepreneurs maybe go wrong?
Yeah. Yeah. If people, if you're not out there networking and talking to people, telling people about your business, you're not going to grow. There's many ways to do that. But I see that missing a lot is people like, I got this plan, I got this thing, I built the website, I've got all this stuff. It's like, yeah, but how do people know what you do and who you are?
How do you advertise?
You got to go out. Go to chamber events, go visit, whatever the centers of influence, meaning like the people in your industry or your target audience, or people that may know your target audience, are called centers of influence. Who are those people? Identify them, have lunch with them, talk with them, meet with them, ask them how you can help them. This reciprocity, right? That's something that a lot of people miss. It's the whole business development side of it. You got to do it. That's part of putting in the work.
It's funny as when you say business development side, and I think of it as simple as, let me throw my business name and my business phone number up on my work truck and drive around town. I can think of plenty of times I'm driving home and I see Tom's Plumbing, Ricky's Automotive, something to that nature. And that's cheap, pretty free advertisement for your company. What about expansions? Do you see pitfalls? Do you see entrepreneurs trying to take too big a bite out of the pie?
Sure. Yeah. Yeah. So people will be very successful doing one location of something. or one form of something, and they're like, this is great. Let me expand. Like I've got this food truck, and it's awesome, and it's paying for itself, and I'm actually taking home money at the end of the day, and now I want a brick and mortar. Well, can you take that brick and mortar to the same places you took that trailer, right? Like how is that brick and mortar going to be successful? That's two different business plans, right? Or I'm successful in this city. Let me go over to this city and open a location too. Well, is that so close to this city that you're just going to cannibalize your other patrons?
Mm-hmm.
And then now you've got twice the expenses, twice the overhead for the same amount of customers because they just want to check out your new place.
Sure.
So you got to, those are some really big pitfalls, is understanding your customer base and where they're at. And if it worked over here like this, is it going to work the same over here? What does foot traffic look like? Is it easy to turn into the place I'm looking for? Is it easy to turn in off the main drag that I'm driving down? And if I miss it, I'll have to go 2 miles before I can turn around and come back and get in there. Like stuff like that, I think gets overlooked because people get excited about what they're doing, which is great. You got to look into the minutia and put yourself in that driver's seat already and be like, okay, I'm here. I've opened it. Now, what does it look like for me to get the same amount of customers out over here in this new spot and reproduce what I've done over here? That's hard. That's really hard to do.
Okay.
And so kudos to the people that make that work. And that's awesome. We love to see growth. We love to see expansion. That's wonderful. But there's many pitfalls.
So kind of what part do you play in when you see things like that maybe happening, when you see those red flags, when you see on the horizon, oh, this may be trouble. Do you have a proactive approach with your clients and say, hey, I love the fact that you're looking to expand from your food truck into brick and mortar. Mm-hmm. I have concerns about lending you the money to do so, and this is why.
Mm-hmm. Oh, yeah.
You have those real candid conversations.
Candid, transparent conversations, because you can't glaze over those things and then 6 months later start asking for the money that's not there anymore, right? And they're like, well, wait a second, you never said any. Again, it's that relationship piece too. That again, do you want to go into the big old nationwide bank where maybe you're just a transaction and then somebody else is dealing with you later? Or do you want the person who's talking to you up front about getting the loan and interviewed you about this stuff?
Well, and I was going to ask that because it seems like what you're saying is, it's a really good idea to find local lenders that know your community rather than default to the big banks. Yep. Because in local lending, you may get a level of service that you may not at one of the big box financial institutions.
Yeah, and the big box, I mean, they employ great people. I mean, I've got friends who work for them, right? But maybe they're doing a transaction for somebody who's 500 miles away. Well, they don't know the local culture. They don't know that part of town. They don't know these things that maybe when you live in that community, you know the things, right? And
okay.
you can kind of give them some real talk.
Okay. So what should business owners expect from you as a business lender? Am I going to have to, are you coming out to my business to check up on me? I mean, you gave me some money. I'm paying you, but do you visit me?
Mm-hmm. Yeah.
Why?
Yeah. Again, we're invested in your business. I want to go see how the business is doing.
Okay.
We do annual reviews on our loans.
Okay.
And part of that is a site inspection. Now, we should be getting out there more than just once a year. Like you said, we should be stopping in and, hey, Joe, how's it going? How's the business going? Looks like you got a full house today. Just things like that, right?
Okay.
Getting eyes on the place, letting them know you're there for follow-up stuff. Small business owners are very busy people.
That seems kind of powerful. You show up just to inspect the business or just to say, hey, how you doing today? Mm-hmm. And you never know, you may just trigger that thought in his head or her head. Hey, I actually wanted to talk to you. I'm so glad you showed up, Galen, because I have this thing I've been thinking about.
Mm-hmm. Yeah, okay. Absolutely. Yeah, because that's how it's going to work. Because they don't have, a small business owner doesn't have time to just take off the day and go meet for 2 hours somewhere, and we'll go to them, and be proactive about it because they have a very busy schedule and they don't want to come in on a Saturday morning and meet at a branch somewhere. That's there as an option. Sure, that's great. I'm not talking bad about the branches, but they've been hustling all week long running their business. If they actually have off on a weekend, like they're going to take their weekend and be with their family.
Okay.
Yeah.
Well, Galen, what I think I want you to do now is let's wrap this whole thing up. give us some advice, offer some advice to our young listeners out there who are thinking about this next venture that they aspire. What advice do you have for these guys and gals, and where should they start? Give us that feel good.
Yeah. So, well, whatever you want to do, know the industry. Okay. So, there's podcasts out there. There's blogs. There's courses you can take. There's people. Lean it. Find a mentor. If you want to go start some business and some kind of trade or something like that, well, first of all, you probably already have mentors because you've learned the trade. But if there's some kind of maybe concept that you want to get into that you've got the resume to do it, but it is different than what you're doing, find somebody who's doing it. Meet up with them. People love to talk about their business. They love to tell stories about how they've been successful. And I think people find intrinsic value in mentoring somebody else. It doesn't have to be this solidified, like, I am your mentor and you are my mentee and we're going to meet regularly every week. It doesn't have to be that way. That seems almost too structured for me. It's find a friend in that business, ask them about their stuff, let them know about your ambitions to do it too, and say, what advice can you offer me? Or hey, how can I help you maybe with your business that might give me some experience in doing this thing before I go sink a bunch of money and time into it? It's really that whole preparation thing. I can't stress that enough. That this is a life change. Especially if somebody's getting W-2 employment and now they're starting their own business.
That's a scary thing.
That's a scary thing. One thing is, like, don't quit your W-2 job.
Sure. Don't quit your day job.
Make sure that starting this thing, you can still work your day job because you need that. You're not going to make enough money to start out a lot of times to live the same way you lived before, right? And things can happen in a new business to where you got to have that W-2 employment to fall back on. And having said that too, W-2 employment, 40 hours a week, 45, 50 hours a week, and you got a boss and stuff like that. Well, now people are like, I'm my own boss now. Well, okay, you're also working 7 days a week, 24 hours a day, 7 days a week, right? Like you are working way more hours. And so not to deter people from starting a small business, but understand that, like, when people become their own boss, you got to aspire to at first you're going to be your own job is what you're going to be.
Mm-hmm.
And then one day, you could be your own boss and you can have other people running your business for you, where you're still paying attention to what's going on. But that's like leaps and bounds and many hours and some years put into it before you can get to that point. So it's not an easy jump. It's all in. And so, being prepared, knowing what you're getting into, at the end of the day, love what you're going to do because you're going to be doing it all the time. But that's great. I think people that are very passionate about their business, they make a difference in the community. They add to the culture of the community. And so I love seeing small business entrepreneurs be successful because of stuff like that.
Yeah. And so I guess I would just add to that don't be afraid to engage with small business lenders. Mm-hmm. They're here to help. They're not just going to be here to take your money and hopefully you pay them back. They're here to guide you through the process, maybe give you some good advice and send you on your way, hopefully developing a better future for yourself. You agree?
Concur.
Good deal. Well, Galen, I really appreciate you coming on today to talk with us about small business and the kind of business side of small business lending.
Absolutely. My pleasure.
I really appreciate it. Well, there you have it, folks. I really appreciate you joining us for this episode of Worth a Listen. I hope today was worth your time.